Hey everybody, still sitting day 3, but hopefully tomorrow I will be better. Today, interesting show. We're going to talk about all the top questions from the week from the community and make sure I'm working. I think I am. We're going to talk about some interesting thought experiments, MicroStrategy versus Sol, Bitcoin versus Sol. We're going to maybe turn some people off buying a house, which is kind of interesting. How many Bitcoin do you need to buy a house in the year 2030? And how many Tesla shares do you need to buy a house in the year 2030? Not my questions, they're from other people. Fantastic, but I love doing this as well. We're also going to dig into how I perp trade. I hope I don't jinx it, but 10 for 10 on perps between 20 to 50% since, I guess, July or so. Anyway, it's going really well. And what else? We'll look at nuclear energy stocks, which is very interesting to some people too, and so much more. Thank you as well to Sean Donnelly. Shout out to Sean and TND Tesla and K8 and everybody here in the chat, keeping us all safe from scammers. Remember, I will never reach out one-on-one. I don't have the time. Wrong screen, wrong button. And of course, I'm just a guy on the internet, not financial advice. And thank you to everybody on Patreon. All the questions come from here. And every week they're brilliant. And yes, I will be touching a hot potato this week because they're the questions. So, if people get butthurt, I don't care. I don't care. What am I going to do? I have to answer the questions honestly and truthfully to the best of my ability. Now let's get into the very first question from General Mustard 45. You recently showed a chart showing the price of a home and the number of Bitcoin. And what if you price a home in Tesla shares instead of Bitcoin? How many Tesla shares would I need to own to buy a house in 5 or 10 years? Could you provide the number of Tesla shares needed in bear, expected, and bull scenario? I love the way you think. Yes, I can. And I did. And again, this could turn people off from buying real estate. But let's jump into it. First of all, this was the chart that I showed a couple of months ago, actually in the Q&A as well. A similar type of question. In 2011, the average U.S. home, they have a cool thing called the Case-Shiller Index that calculates the average price of a home in the United States. In 2011, it was 77,500 Bitcoin. Imagine if you were clever enough to sell your house in 2011 and buy Bitcoin. Woohoo, you did well. 2015, 1,500 Bitcoin. 2020, 60 Bitcoin. Today, 7.14 Bitcoin. Ta-da! Now, let's show you that Case-Shiller Index. And this is important because I'm going to use this to calculate the future price. And for giggles, I'm going to pick the year 2030. Okay, so 6 years out between year 5 and 10. But by 2030, I believe, based on this, over the last 12 years, U.S. home prices have gone up 152%. The average price of a U.S. home now is $335,770. I believe, based on historical annual compound appreciation of 8.08%, a house in the U.S. will be worth $532,896. Well, hold on a second. That sounds like a good trade. But remember debasement. Money printing is going into high gear. The cost of a little pail of blueberries will be $10 or more in 5 years. So bear that in mind too. So given that, that's how much a house will cost. Let's forecast some Tesla price predictions. And we did have a rager of a week in Tesla last week. So and I'm using Ark. I have over 100 price prediction models for Bitcoin, Tesla, Salona, but I'm just going to point to Ark. And the reason I like Ark is because in their price predictions, they do not include bots, okay? Which is huge, which is basically what I love to do is sandbag. Okay, so this is the series of price targets from Ark Invest. Bear, $2,000 a share. In 2029, so I'm sandbagging it twice. One, not including bots. And number two, bringing it a year ahead of 2030. All right, so expected 2,600 and bull 3,100. Again, we could go a lot higher. So what does that mean in terms of shares per house? Here we are. Ta-da! So there's a couple of interesting things in this little chart I put together. One, depending on the bear case, you would need today 266.45 shares, which is very close to my kind of my bear case of shares needed to retire on in a very expensive place. Expected is 204.96 shares, call it 205, and bull case 172 shares. What's really bizarre is, as you know, if you've been in Patreon for at least a couple of years, you know how much we stacked at 104, 106, 120, 130, 141, etc., etc. But if you nail the bottom, you could have bought a US house in the year 2030 if the bull case hits of $172 for just $17,878. The point of this is investing can be very lucrative, and being in the market is more important than maybe owning hard assets like real estate. Think of that. So basically, the opportunity cost of buying a house now instead of buying Tesla shares is very high, ladies and gentlemen. So I hope that helps, but I've taken it one step further. I've gone back full circle, taken this question and twisted it around how many Bitcoin would you need to buy a house in the year 2030 using the same math. And here we go, everybody. I estimate a house in 2030 will cost 0.619 Bitcoin per house. And then, of course, as always, assume the planet exists and, of course, Bitcoin exists too. But I think that's funny. So 0.6 Bitcoin. Hey, Joe the Hun. Thank you so much. 0.6 Bitcoin is very cheap for a house, considering you could have bought a Bitcoin at 15,500 a little over a year and a half ago. Crazy. Again, investing works, especially when you time the market. We'll get into more about price predictions, timing the market, and pairs as well with the subsequent questions. But the next one is also very interesting. First of all, this is from Mr. Canning. You have said that Bitcoin is a risk-on asset, but to the best of my knowledge, it has tanked each time the market has dropped. Is that you see changing this the cycle and becoming a risk-on asset at some point? So there's a slight twist in your interpretation here. First of all, Bitcoin is a risk-on asset, just like the NASDAQ. This is a chart of the correlation between risk-on assets, which are like NASDAQ stocks, and the Bitcoin price. And a couple of things you'll see here, and the red arrows I've added between the lines to highlight exactly what happens. You can clearly see that, one, Bitcoin falls more than the QQQ, although there is a correlation with equities. So risk-on assets, NASDAQ stocks, when they tank, Bitcoin tanks each and every time. The problem is Bitcoin tanks more than NASDAQ stocks. This is just the last 90 days, 3 big dippers. But overall, NASDAQ has actually beaten Bitcoin. NASDAQ's up about 7%, Bitcoin's up about 2% over the last 90 days. But you can see the positive correlation. And this behavior is typical of risk-on assets, which tend to decline. But I think maybe you heard me say something before which was related to this, and that is this. I do believe the day will come where Bitcoin will become a risk-off asset. So when people want a flight to safety, they'll move to Bitcoin. We're not there yet, but you can see Bitcoin still has extremely high volatility, very much like risk-on assets. The volatility is about 81% a year, and excuse the little typo. And obviously, this is what happens with risk-on assets. Also, the higher the volatility of the asset, the higher the returns typically. You'll hear Michael Saylor talk about how he loves vol. And as Bitcoin gets mature, however, I believe the volatility will fall, and I believe Bitcoin will become that risk-off asset. But for now, we are full-on risk-on, everybody. So pedal to the metal. So I hope that helps. And next question is from Jobber Walker. And in InvestAnswers, the other day you entered a solid perp trade. You used IADSS on the 5-minute after a buy signal was thrown. There were no buy signals on the longer intervals, such as 4-hour or 1 day. And a day before, you gave us a chart of intervals and timeframes. Do you intend to be out of that trade intraday, as the chart you posted would suggest? And if not, what am I missing regarding the use of timeframes and chart intervals? This is so important. I think the chart you were talking about was what I compared to, like scalping versus day trading versus swing trading versus long-term investing. They're kind of the 4 big windows of time that I see in trading. But let's show you, I'm going to walk you through my approach when it comes to perp trading, the tools I use. And as you know, I like to find confluence across multiple indicators to really give me a very high degree of confidence. And that's why right now I'm 10 for 10 in perp trading. All of those trades are published. You've seen them all live, and all have returned between 20 and 50%. So let's talk about this. First of all, I look at IADSS, and I look at on the 4 hour. That's kind of my golden. And you'll see at the top, you'll see the sell zone, and at the bottom, the buy zone. Now, there will come a day when Solana breaks out, and this will be redundant, but it'll create new sell zones and new buy zones. But over the last, I guess, most of this year, it's been kill zone around 120, 130, and sell zone kind of north of 170, 180, 190, depending on where you are. Now, after that, I zoom in to the 1 hour to see what's going on. So I find the opportunity on the macro 4 hour. Then I zoom into the 1 hour to see exactly where we stand. I watch the trend carefully. I look at the back tests, the Confluence model, and determine, am I getting a signal? And then when it comes to strike, okay, this is when I actually pull the trigger to find the precise moment, especially with things like Solana that move so fast. I go to the 3 minute or the 5 minute. And lately I found the 3 minute to be very reliable. And I'm getting in and out of these perps, every week or so. So that's why you have to go to the 5 minute to find out the time to strike. And if you want to even trade a lot more frequently, you can see how you can do this almost every day. The reds are the times to get out. The greens are the times either to get in. But remember, you watch the trend. Sometimes signals fire, sometimes they don't. But this one will help you at least determine 80% accuracy of when to do it. But I take another step further as well. I look at pair trading on steroids for Confluence on the 15 minute. So I'm looking at IADSS on the 4 hour, the 1 hour, and the 3 or 5 minute. Then I go to PTOS, and this uses 3x leverage assets. So I find out what they are doing and how they look. And you'll see very clearly the buy signal when you get the standard deviation on the PTOS model below 2. And above you get the green flag. When those two correspond, that's a signal. And the sell also above 2 standard deviations to the upside with red flags. Wait for the trend to turn, then you sell. Same thing again, buy. Boom, boom. It's like stealing candy from a baby. But then sometimes I use the ATR first as well. This is the ATR for the macro view on the daily chart. All right. So it's getting complex. I've shown 5 different charts already. But the ATR on the daily for Solana is also extremely useful. You'll flash the sell signal, wait for the trend to turn, get out. Buy signal, wait for the trend to turn, get in. Same thing again, little red flash, trend to turn, get out, get in, get out, get in. Right now, we're in an up cycle on Solana. I'm still in the perp. It is a monster perp, by the way. Let's check on the Solana price live. It's about to touch $177, and it's gone up from 162. That was Friday. So big move. But again, as I always say, it's almost too predictable. Basically, crypto pumps at the weekend. And that's how it works. But there's more. Because Jobber Walker, there is a second part to your question, which I get a lot too. So I broke it into 2 to remember this is just the 5 charts. And again, I like points of confirmation from multiple sources at the same time. When all of these gel, boom, you're going to win. It's that simple. Now, this is the other part. Also, if you recall, you said keeping your leverage trades to 1% of your bag. Assuming someone has 100 sol and they want to do a 3x long, does that mean you would do that trade with the initial 0.3 sol due to 3x leverage, thereby risking 1 sol? No. What I do is a little bit different. Right now, I'm probably more than 1% of my bag. But anyway, I got to be careful because I don't want to get too confident with this. As soon as you become lackadaisical in the markets, that's when they rip your face off. So always be humble in the markets, everybody. But this is what I mean by 1% leverage. Imagine you have 1,000 Solana. 1% is 10 Solana in perps. And the person uses 3.3x leverage. That means you're putting in 3.3 times the 10, which is a value of about 33 sol. But remember as well, I'll say this, I'll zoom out for this. Perp trading is very risky. It's only a matter of time before you get your face ripped off. That's why if you only allocate 1% of your bag and you get your face ripped off, that's okay. But if you're making 20 to 50% every week or so, the power of compounding makes it well worthwhile. So even though you're only investing 1% of your bag, like what I have is a wallet where I just use it just for this one purpose. And I know exactly how many SOL I put in initially, and I know exactly how much I have now. So I can actually measure how much I've made. And that's some wallet advice for this too. Anyway, perps are risky, but they're a lot of fun. And, we'll see. By the way, we'll be playing this on the way down when the time comes too, because you can make money on the way up and on the way down, ladies and gentlemen. So Job Walker, hope that helps. Is something out of sequence here? It is. Hold on a second. There is a question that's a little bit out of sequence here. Let me make sure. I don't know what happened. Yeah. Yes. This is the question for the next question. Sorry about that. The slides are in order, but the question got messed up. So here we are. This is the first time Nicholas O is posted. Welcome to the community. Thank you for the excellent content. Suppose you had just a few hundred shares of MicroStrategy. Would you hold on to them as a long-term investment, just as you would Bitcoin, or would you sell them when Bitcoin reaches the top, or buy them again when Bitcoin reaches the bottom? So this is, hang on a second, everything has got messed up. Yeah, okay, this is the answer to that question. So I'm going to put this in, and sorry about this. Some of the things get jumbled up a bit. So these are my rules, not your rules. I'm very, very big on rules in the market. MicroStrategy is no secret. It's by far my biggest position. And however, the rules in markets are never sell all your winners. Always hold. You'll never sell all your Bitcoin. Always keep some. Maybe you take a little bit of profit, maybe some lifestyle chips, maybe nail the top and get back in lower. That can also work, but beware of things like taxes if you are in a tax jurisdiction. And as a result, when you think about MicroStrategy, you have to always think about Bitcoin. MicroStrategy's volatility is higher than Bitcoin. And I do believe I will be on top of timing the Bitcoin market cycle top because of the investments we've made to be able to identify that. But timing is actually hard. So you may want to consider taking some profits or putting in some hedges, depending on your tax situation, or just getting out altogether. But net, we know the MicroStrategy does very, very well in the bull market. We've seen that. It's melted people's faces. It's destroyed hedge funds. But at the same time, when the bear market comes, it could get nasty. So bear that in mind. Excuse the pun, bear market, bear that in mind. Now I've got to try to figure out where my slides are. Hold on a second. This one, let me see. That's that. That somehow the slide is gone. Somebody asked a question regarding Sol versus MicroStrategy. Hold on, I got to find that. I don't know how this happened. Bear with me 1 second. Not that. No, not that. I think the question has disappeared. Nuclear reactors. Oh, here we are. This is the question. And I found the question, and I have no idea why the answers are so far away from the question. But we're getting set now. All right. This is also related to MicroStrategy. And thank you for bearing with me. I did say I'm slightly off my game. So, first of all, this is from Avocado. Hey, James, thanks for all you do. One of my favorite things I learned from you was thinking in terms of pairs. I was looking at the Solana MicroStrategy pair chart, and it looks like it might be a good time to do the swap. Question is, will Sol outperform strategy from here? So let's dig into it. It is a very interesting question, and I spent a lot of time trying to find optimal pairs to trade between. And this one is interesting. First of all, Solana has outperformed MicroStrategy, but it is a series of very violent swings. You can see here on the ATR model. You can see since bottom of the bear, etc. Sol has done better. So if you only had one trade, you would have been 151% better off holding Solana. That's how crazy it's become. However, This is interesting. Since the beginning of 2024, MicroStrategy has outperformed Solana. So that tells me, what's going on here? And remember, MicroStrategy is a function of Bitcoin. So if you look at this chart, you could argue that Solana has bottomed against MicroStrategy. Now, let's look at since 2024. Not only has MicroStrategy done well, but they are not correlated. In fact, you could argue 80% of the time they are inversely correlated. And that is kind of unusual. Now, the big picture. So I have not been able to build a model to find a pattern between trading these two assets. I have, however, on Tesla and MicroStrategy, but not these guys. However, your question is, which one will outperform? My answer is going to be very controversial, but here it goes. Ready? I did say I might hurt some people's feelings, but all my life, I have always valued assets using fundamental data. We build models on models on models that help us find the winning assets early, and we get in hard. That's the whole thing. You do the upfront work. But if you look at things like fees and adoption and market capitalization and another 69 ratios, based on my analysis of blockchain networks, Solana is significantly undervalued at its current price. All right, I'll talk more about this on DCA tomorrow. Significantly undervalued. Right now, the market cap of Solana is about a 17th that of Bitcoin, but it's far faster. It has 7,000 more transactions, nearly 1,000% more users, 528% more transactions per user. The fees are 1.2 million% cheaper. And developers, Solana has more developers, more weekly commits, a lot more activity, and I could go on and on for hours. And again, I did warn you, some may find this controversial, but it's just data. If these were two stocks, like two businesses, Bitcoin and Solana, all right, this Solana should be valued a lot more than Bitcoin. But I know Bitcoin is a store of value and Bitcoin is scarce, and Bitcoin has some wild cards up its sleeve. So the world does not run on Solana yet. It might in the future, or maybe there'll be a Sol killer coming up. Who knows? We'll wait and see. But this is just breaking news. Shout out to Marty as well. It's from Global Eye News. Russia will officially start using crypto for international transactions next week, bypassing US sanctions. Things like this, and the adoption, and Bhutan, and all the other stuff happening around the world, Bitcoin is scarce. Very, very scarce, and we're still so early. So could Bitcoin outperform Solana? Possible. Based on my fundamental analysis, unlikely if Solana continues on this trajectory. And Bitcoin could do really well if things like this happen. I've said for years now, the minute a barrel of oil is denominated in Bitcoin, that's the moment that everything changes. This could happen next week. And I know people who are like pro-dollar, they go, oh, but it's going to hurt the dollar. Well, we're in Bitcoin for that reason. We don't like melting ice cubes. In addition, what's also very big is this will really trigger a lot more game theory and change fiat altogether. Not only the stuff that the BRICS nations are doing, but this game changer. So we'll see exactly what will happen next week, but it'll be fun to watch either way. And also, this is back to Solana. The question, will Solana outperform from here? The answer is, I think so, yes. The Solana ecosystem is waking up. Solana is crushing everything as it has been for a long time, months and months and months. Yeah, sometimes it has an off week, etc., but that's normal. But if you look at the top 7 performers from the top 500 cryptos, this is bonkers, that are listed in CoinMarketCap. You can go there, sort yourself on the 7-day return. The top 7 are all on the Solana blockchain, which is really bizarre. I've never seen that happen before. So again, Black Hole Sol is happening, but so is the Bitcoin black hole. And that's why I have equal loads of both. Hope that helps. But not if you include my MicroStrategy, then I'm very heavy in Bitcoin. So hope that helps everybody. Next question is from InfoSeeker, which is related to Solana. And thank goodness the slides are in order again. How can Solana actually be used for real world transactions when over half of my transactions fail? I'm trying to withdraw Nosana staking rewards, and yet I have 10 or 15 failed transactions in a row. Okay, so this can happen because you haven't dialed in your settings. And I've never had a problem. And I'm perping all the time, as you know, and I'm using the chain all the time. So what you can do to make sure you have zero issues is, first of all, adjust your transaction priority fee. I'll show you how to do that in a second. And that will increase your odds of getting processed faster. Also, maybe if it's just unstaking stuff, you can do that in off-peak hours. You don't have to do it in the middle of heavy trading times. And also, you can use an RPC node alternative. Switching to a different RPC can really help. First thing, priority setting. These are my settings. I have priority fee. I have priority level ultra. And I put in my set max cap of fees. I don't mind paying 71 cents for a transaction because I'm moving certain amounts across. So I always get my stuff filled and serviced fast, okay? Again, 70 cents, do I give a crap? No. Could I wait for 0.00025 cents? Yeah. But again, I want to get my deal done when I need to get it done, especially when I'm nailing a bottom on a Salona perp. I need to get in that instant because within a minute, it could be $1 higher. First of all. Second, choose your RPC. Right now, when I took the screenshot, I was on Helios, which has 62 millisecond response time. But just go there. You'll see the time in milliseconds. You can create a custom one if you like and take from there. And that will help too. Go with the fastest with the lowest millisecond response time. And then regarding your Nosana specifically, make sure you have enough in your wallet to cover the transaction fees. Check if there's a cooldown period after staking. And also consider using Nosana's official staking interface and reputable wallet, which actually helps too. Speaking of Nosana too, that thing has been on fire. Just because you mentioned it, it's up 200% in 17 days. And as I mentioned up here too, all the Solana alts are coming back to life after, in full disclosure, a very miserable summer as well. So we're alive again, which is good. Next question is from... No, I did this one already. Or did I? No, I don't know. Lord Voldemort, thank you so much for the work you're doing. My pleasure. That's my mission. You don't have to thank me, anybody, as well in the future. A quick question about ATR. The recommended Tradingview plan is essential, but I see that it works well on the basic plan. Are there any technical differences besides not being able to create alerts? So let's break it down. And I've got many Tradingview accounts and I use the best there is, but I have lots of indicators and hundreds of alerts. That's why I look at many assets at the same time, and I can tell when they fall into my traps because bing, and I can work 24 hours a day finding things. But yes, the pros of the basic plan, it's sufficient for your visual analysis, and you can monitor your ATR model signals, and there's no cost. It's free. So that's the pro. The con is you cannot create those alerts. They are so important to me. And you also have a limited number of indicators per chart, which is also important to me. I think the minimum is 1 or 2. It used to be 3 in the old days, but often I have 8 or 10 indicators open on one chart sometimes. Also, you got fewer saved chart layouts and also reduced access to historical data for backtesting, which is very, very important in the models. And you get a slower data refresh rate too. So if you're taking this trading seriously, the old expression is a good craftsman needs good tools. You need good tools. If you're just dabbling and you're just doing a trade every month and you're busy at work during the day, you can get away with the free plan. But if you're taking it serious, go premium. And the advantages of the higher plans, again, you can enable alerts, more indicators, etc., more historical data for analysis, faster updates, especially in fast-moving markets like crypto. Very important. Next question. This is, and I know a lot of people are interested in nuclear, etc., and I've been keeping my eye on the space too. This is from LH2OZ. With emphasis on transformational tech, there is recent proliferation in the field of nano nuclear small and SMRs. You'll hear that word a lot, small module reactors. Would love to know if OKLO, SMR, CEG, and NNE would qualify for being in my bag, and maybe even foster a comparative analysis of the players. And Thomas W., is there a good nuclear energy company that you would consider at this point, etc.? So what I did was I had a look at some of the ones you've listed. I have looked at them before. I actually have a watch list of nuclear companies, and I even look at uranium. I actually I didn't buy uranium because I don't like commodities anymore. I used to in the old days, but I prefer crypto. Is much easier to play than commodities. But I did give out a uranium alert. I can't remember what the price was, like 26 or 25 or whatever, a few months ago. That's an interesting way to play. But let's look at these stocks, okay, because they are interesting. First of all, Nano Nuclear. Oh my goodness. They are pre-rev, which means they are making no sales. They're losing a ton of money, and they'll be out of cash in 3 quarters. And also what sickens me is the pink. They're paying themselves a lot of stock-based compensation. So no, it doesn't qualify by any stretch for my standards. And by the way, my standards are very high because I benchmark them against other assets. And I like to be in the winning asset. I don't like to dabble around the edges unless it's something very special. Next one is NuScale. You can see here, shrinking revenue. Holy crap. In a hot area, how is revenue shrinking? Very bad operations, very bad accrual management, and very high stock-based compensation. Again, next. Then we have OKLO. Oh my goodness. Alarming losses, alarming stock-based compensation. Hard pass. No thanks. And finally, Constellation Energy Grp. They turned a profit, which is good. The only one of the 4, but they all remind me of biotech. And the most alarming thing here is look at the debt. Absolutely insane, nearly $10 billion in debt, tiny amount of cash on hand. In this high interest rate market, that's a very scary situation to be in. So again, I know nuclear is hot. I know there'll be maybe some consolidation. I know some of these companies may sell out to a big utility or whatever for a profit, but I would not touch them because there's another energy company, and you know the name of it too. I'm just going to spend a second talking about the safer, easier play. First of all, this is Tesla Energy. Shout out to Cern Basher. Put this brilliant chart together, and I'll walk you through the chart in a second. But Tao Lin says energy is a massive growth axis for Tesla. They have, as far as the eye can see, demand, and they're making, get this, 31% gross margins on energy storage deployments, and they're set to more than double by the end of 2024. It's insane. And Wall Street just woke up to it this week too. Also, if you look at this chart, you have deferred revenue, which is blue, and you have unsatisfied performance obligations, which is stuff that they have not turned on. Think of the utility installations taking a bit of time. And here, reported revenue from CERN is they had record revenue and profit and margin for the energy business. And for the last 12 months, it grew to $8.5 billion. So this doesn't capture the full picture because some of the money Tesla is owed for energy projects is counted separately as deferred revenue or this unsatisfied performance obligation. Let's call it UPO. Sounds like UFO. And these represent payments or commitments for future projects that haven't been fully recognized as revenue yet. When you look at this, when you include deferred revenue and UPO, the total indicative revenue as a measure of the future potential is growing by 73%, and it's going to be $14 billion over the last year, which is nearly $6 billion higher than the official revenue reporting, indicating that the business is actually growing much faster than Tesla are letting you on to believe. Again, I went through a whole bunch of nuclear companies, all losing money, all crap shows, all not growing, except for one. Constellation is growing and they're making a little profit, but the debt is insane. This company has more than $30 billion in cash. They're making more than 30% margin on their energy products. There's infinite demand for these energy products. It is bonkers. And again, stop your messing about. Just buy Tesla. I know it's nice to try and chase other dreams, but it's very risky. You always have to balance that risk reward. This is a sure thing. And they're sandbagging the way I do their actual results. And it's going to be bonkers next year. They're going to have so many paths to crazy high margin revenue. It's going to be insane. So I hope that helps. Next question is from Financial Freedom 07. Hi, James. I've been Patreon member since last December. I'm glad I joined. Woohoo. Thank you for being part of the team. My portfolio is 50% Tesla, 16% Bitcoin, 12.5% Sol, MicroStrategy 3.8%. Sadly, late to the party. That's okay. And CleanSpark 9.1%, larger than 5%. And the rest, some Sol, Alt, and Sui. Good job on the rest of the allocations. Keep them very small. But you mentioned to sell CleanSpark in a recent Bitcoin miner video based on my portfolio. How should I allocate? Should I buy more MicroStrategy? And in addition, my goal is to have 300 shares of Tesla before it explodes. And I am 70% close to 300 shares. So this is interesting. So first of all, my video, the Miner-ity Report I did about a week ago, it did not say sell CleanSpark, okay? So I do a ranking of all the public miners and stat rank them. CleanSpark was dethroned. It went from number 1 to number 2, and Hive went to number 1. But that doesn't mean I didn't sell any CleanSpark. It's just per my ranking, they were dethroned slightly by Hive. They're both good. There's a lot of stuff happening on CleanSpark too. The ATM was approved, so there could be more dilution, but what they do with that, I'm not sure. A lot of the analysts are still very bullish on the asset. So that's the first thing. I did not say sell CleanSpark. So please, everybody, make sure. I'm always worried people will misinterpret my videos, but I couldn't be more clear. It's a ranking. And again, I share all the data so you can make up your own analysis. I don't tell people to buy or sell anything, okay? Very important. Second, these are my rules. Again, I'll never tell you what your rules are, but never allocate more than 5% to miners. I've said this since day one. Just like altcoins, Sol alts. Never more than 5%. You are over-allocated in my book. And Tesla sadly exploded this week, Thursday and Friday. But I do believe, as we covered before, it still has a long way to go. And of course, MicroStrategy has completely smoked Bitcoin miners. In fact, this year it's also smoked Salona. So take with that as you will. I would definitely scale back and reallocate a little bit. And again, I love the way you have a goal of 300 Tesla shares. That's so, so important. And it ties into, let me see, how many Tesla shares will you need for a house in the year 2030? Let's get that. Where'd I have it? Got to pull this up. Da-da. As a reminder, I got to remind myself to make sure in the expected scenario about 200 shares. So you'll be able to buy a house and still keep 100 Tesla shares in the future. And I think Tesla will go a lot higher than these ARK predictions by 2030. We'll see. We'll see if I'm right. So that was the miner question. And the next question, again, another hot potato. Stop asking me hot potato questions because you force me to answer them and then some people get upset. But here we go. I'll do it anyway. Moodus Billy, hey James, thanks for what you do. You recently said that if certain things happen with the elections, the market could tank. So we need to have massive hedges in place. Can you elaborate on that? Hey James, if certain candidate wins the election, crypto and Tesla is expected to go up, right? We'll see. And Sean D, what do you see happening for Tesla and Bitcoin if the left wins, etc.? So there were literally hundreds of these questions. This is the top thing on the mind of people. And I'm going to share one thing. I'm not going to take a position in this because this is me. I stay out of it while there's the left and the right that they fight. This is a very appropriate meme I saw yesterday or the day before. I'm impartial, but I am a trader. So I trade based on data. Okay, so that's probably where people are coming. But if we do look at an analyst perspective, again, I shared this briefly yesterday. This is the post-election playbook from Standard Chartered. And they basically said Bitcoin will hit 125K by December if they say the Republicans win, and otherwise $75,000 by year end if the left wins. So that's Standard Chartered. That's their point of view. They believe the right will be bullish for the markets, bullish for Bitcoin, and the left, not as much. So take with that. I'm not going to share my positions on this at all. I stay away from that. Again, a reminder, that's me in the black t-shirt. Of course, I'm not going to take photographs of the groups. I'm a pacifist. I'm very anti-violence, but I thought this was appropriate. I stay out of it, but I do trade around market data, whatever that is. And second last piece, shout out to Sean Donnelly. This is Benzie. Benzie's named after benzene. He's full of energy and an amazing soccer player. And Sean, I know you love soccer as well. And also, we donated to the International Animal Rescue to help Costa Rica veterinarian team afford medical equipment. So a big thank you, everybody. And tomorrow is DCA Live. I will be moderating, and we have a very exciting agenda. And we'll be talking about the potential of maybe a new alt season happening under our very eyes as we watch the markets. And you'll find out as well how the team here are placing their bets, what they're doing. I'm going to answer some live questions now. I want to thank you once again to the mods in the chat. Actually, I can just turn this off. So you can see me. And thank you all for coming. And I hope we didn't hit on too many hot potatoes there. So first of all, from Doc Intern, hope your back is doing better. Thank you. It's day 3, so it normally lasts 3 days. And here is another election question. Again, when I'm posed a question, I'll answer it honestly and truthfully. Your thoughts on selling everything to cash in a 401k just before the election and then buying back afterwards? That's very risky, but it sounds like you're talking about stocks. It depends what you're in. It's very clear if one side wins, certain things will really appreciate that, like Tesla, Bitcoin, and that's just the nature of what's going to happen. I will do a poll within Patreon because I am analyzing about 20 different data sources, which will tell me with a high degree of confidence which side is going to win. And I can share that, and that will help me determine what I do. I will not be selling stuff because of tax reasons, but I will either get into big leverage long positions or short positions, hedge positions, depending on exactly how the data shakes out, starting in a couple of days. So that's my position, Doc Intern. I'll do that post because I know this is the weird thing. If you even mention politics, people go mad. And I said months ago, you can't be in things like crypto without watching politics. And they are inextricably linked, and they always will be. So if you are in the markets and you care about your returns, you have to watch what's happening with the macro. As I've always said, you've got to keep your head out the window, see what's going on in the world, whether a rocket is flying or something is happening, global elections, or something's happening with interest rates or money printing. All of this impacts your bags. There's some good things that could happen if one party happens. It'll change the SEC. Hopefully they'll make the government more efficient. All these different things, and they all have an impact on our position. So I hope that helps. But I will be sharing my plans as I always do. Every transfer, every hedge, every trade, every movement, and you'll know what I'm thinking when we get closer. And hopefully the data will be good enough to make that decision. Justice for all. In what scenario do you see Jupiter catching up to Radium? Why the price gap? Well, Radium is a DEX that makes huge revenue and profit, okay? Jupiter, not so much yet, but I do believe in aggregators, and I do believe both can win, and I do own both. In fact, they're almost equivalent positions. I sent out my solid portfolio last night, so you'll see that. Jupiter is special, but the tokenomics, you could argue for Radium are better because it's been around longer. But Jupiter is also burning, I think, 3 billion tokens, and Jupiter also gives out tremendous rewards. The ASR rewards every quarter are just incredible. So I look forward to as well the January when we get the annual allocation for usage. That'll be big too. Again, I own both. They'll both do well, especially as the Solana DEX business is destroying everything. I mean, Uniswap and everything else. It's bonkers. I'll share some data on that tomorrow as well. Joe the Hun, thanks for all you do. My finances are getting healthier by the minute. Awesome. But stay humble in the markets. Tesla MicroStrategy and Sol Perps are changing my life. You're the best. Got friends watching YouTube as well. Oh, thank you. And thank you, Joe the Hun, for being here. But remember, perps are we're playing with fire. Manage your risk. All the rules. 1%, no more than 3.3x. If the market does take a tank and your thesis hasn't changed, think about doubling down and then take profits at 20 to 50%, like clockwork. But they're the rules that I built. And I build rules to ensure the probability of high success rates. Touch wood, yet to get a kick in the teeth. Anyhow, Paul Poco, hodl CSE by Thursday, 1.40 and sold 1.70, made $1,000 profit. Woohoo! Hodl is Sol Strategies. That stock has been bonkers. We first got in at 16 cents. It's hard to believe it's more than 10x'd. Since I was actually a Q&A video on the 27th of September that we covered here. Let's keep our eye out for more of those little treasures. Adam Q. Got to pay for my construction on my new castle in 12 months. I have the cash to cover, but was wondering, should I sell my Sol and Bitcoin in the bull to use cash to dive into the market during the bear? Adam Q, you're in Australia. It depends on your tax situation. Sometimes if you have like a position where you have a low average, like low single digits on Solana, and you sell it at $200 or $300, you have huge tax consequence. So make sure you allocate for that. But there are things happening in the market right now. I do believe there's a theory that I've had for a long time that the impact of the halving will diminish over time, and we'll get away from the traditional 4-year cycle for crypto. Possible. Small chance, like less than 20% chance. But I also believe in the perpetual bid for things like Bitcoin from the ETS. I also believe that everything is moving to the blockchain. Everything, including international trade to skirt around sanctions and stuff like that, to international money transfers, to banks, to stock exchanges. Everything is moving to the blockchain. And that could also strengthen my thesis support of us going up for a long time. We may not get that crazy bear market people are looking for. But you could also argue we went through a bear market this summer because prices did fall nearly 30%. So there's that too. Markets will be volatile. I prefer hedging and trading around it than ditching everything. And I'll never sell all my Bitcoin, and I'll probably never sell all my Solana because I think it's while the thesis remains, it's still the winner. And thank you as well for your super sticker, B-Man and Signal 103. And once again to Sean Donnelly and TD Tesla and K8 out there. I think that's a wrap, everybody. People must be away today. Very small amount of people here. But thank you all for coming nonetheless. And I'll see you all tomorrow. Bye-bye. Maybe I got silence for touching hot potatoes. Anyway, good night, everybody.